Hi everyone, my name is Joe. I'm a real estate investor in San Antonio, Texas. I wanted to talk to you today about a different kind of real estate investing that you might not be familiar with. It's called owner financing. Now, most investors, when they first get started in real estate, they're probably thinking about renting property. And there's nothing wrong with doing that. But with owner financing, there are many advantages. You can make more money and just deal with less hassle generally. And I wanted to detail for you 6 different reasons why owner financing beats being a landlord. Number 1, there is minimal repairs and no overhead expenses with owner financing. So let's say, for an example, you're going to buy a $50,000 to a $75,000 house. Then you would do just a $5,000 to $10,000 rehab on the property. You don't have to do a full rehab like you would with a rental property. And then you will have your qualified owner finance buyer finish out the rehab for you when they move into the property. So that person is going to pay you a monthly payment every month, but they're not a renter. They're the actual owner of the property. You're the bank. And you're just you're selling them your house on terms over 20 or 30 years. So what you have to remember when you're dealing with an owner finance buyer, though, is you have to very carefully qualify those buyers. They've got to have a steady job. They've got to have a good down payment, at least $5,000, maybe $10,000 down. And their income has to be documented with pay stubs, bank statements, tax returns, and so forth. You've got to make sure that you have a good buyer in that house. But once you have a good buyer in that house, you're going to get steady money every month. And you're not going to have any repair expenses or any overhead costs. The other thing to remember is very important is with an owner finance buyer, you want to make sure that they have disposable income left over after they make the payment to you every month, because you want them to fix up that property. Point 2, steady and predictable cash flow. You won't have any repair expenses with owner financing your property rather than renting. So you're going to know exactly what your monthly cash flow is. I've rented out a few properties in my time, and I can tell you one of the biggest frustrations is you don't know what's going to break that month. If the water heater is going to go bad, or the roof is going to go bad, and so forth. So you don't know if you're going to make money that month. With owner financing, once you get a good buyer in there, you know what your cash flow is going to be every month. There's no property management fees. You don't have any maintenance headaches like with being a landlord. And your buyer pays your taxes and your insurance. So you literally have no operating costs on the property. You're just taking the cash flow every month. An important tip on this one is to make sure that you do escrow the taxes and insurance payments from the buyer, because you don't want to rely on them to pay the taxes and insurance. That could lead to a disaster situation. You definitely want to pay that yourself. Point 3, you can do a quick foreclosure in a lot of states. Now, you need to check with your foreclosure rules in your state. Here in this great state of Texas, you can foreclose on a property in 60 to 90 days. Cost you, in this price range, about $1,000. It's quite easy to do. So if you do ever get into a situation where your buyer loses their job or they get divorced and 3 or 4 years down the road, they can't pay their mortgage, you foreclose on them, you get them out of the house in 60 to 90 days, and you just resell the house. And the great thing about owner financing is they had an ownership in the house, so they probably took better care of it than a renter ever would take care of the property. So you could very well get the property back in better condition than when you sold it. And that means, of course, you could just sell it for more money once you get the house back. And, of course, you'll get the $5,000 down payment again. Important tip here is to carefully check the foreclosure laws in your state, because some states it may take longer to foreclose, so you definitely would have to bear that in mind if you're considering to owner finance. Point 4, you have secondary sources of cash flow with owner financing rather than landlording or renting. Like I said in the last point, you can resell the house several times, and you could get the $5,000 or $10,000 down payment several times and get that $800 or $900 a month several times. So you just end up with more cash flow from the same property. Another point here is late payers sometimes on these houses. They pay you a month late, so you're going to get a late fee every month, and that can increase your investment yield as well. Point 5, why owner finance and not landlord? The property increases in value. As I said before, owner finance buyers have a pride in the home ownership in the property. They have a stake in the property. So they'll repair it and update it, and the value of the property will increase annually. Now, it's true that that the buyer is going to realize the appreciation of the house because they're buying it. However, if they ever do default, then you get the house back in better condition. You can just resell it for more money. And point 6, the neighborhood will improve with owner finance rather than landlord. As more owner finance buyers come into the neighborhood, it raises up the entire community, because there's nothing wrong with renting property, but sometimes renters don't care as much about the quality of the neighborhood. Homeowners care. So as you get more of the homeowners into the neighborhood, you'll see the community standards will raise up. You'll notice the neighborhood gets nicer, and you'll see that people get more, they just care more about their community. And another benefit there is if you own multiple properties and you ever did have to foreclose, all of the houses increased in value in that neighborhood because there's a lot of owner finance properties there. So if you ever did have to foreclose on some properties in a downturn, you could end up with higher property values. So that's the 6 points of how owner financing beats being a landlord. And in summary, owner financing properties instead of renting is just more profitable in terms of your monthly cash flow. You don't have property management fees. You don't have overhead costs. You don't have to worry about repairs of water heaters and roofs and those sorts of things. No property management expenses. The buyers pay the taxes and the insurance. You literally will have almost no operating expenses if you're buying the property in cash. So again, you'll have a $50,000 to $75,000 house, 10, 12, maybe 13% rate of return with no overhead cost to you, the investor. I mean, that's a pretty darn good deal. Thanks so much for watching my first podcast. For more information, just refer to the description where you'll find my LinkedIn group, website, phone number, and email address. Please stay tuned next week for our next podcast, and I hope you have a great day.